let's have a look at high yield ETF. So first off, you want to read this disclaimer carefully. Then do your good deed of the day by liking and subscribing, because here is the high yield ETF. 6.5% from the 52-week low, 6.89% away from the highs. Here is the chart. It's quite some distance here away from the highs. So even though, if you look at the SPY, the stock market is holding up, but the high yield market here, it's not holding up that well. And so the smarter money, as it's called, because the big brains are more into the bond market, not strong bullish sentiment here. Not corroborating what we see in the stock market ETF. We do have a bit of a support here. We have support from the rather important red 200-day moving average. Pretty big deal. It's been resistance here, a bit support here, so it's a level that matters. If we look at these other indicators, we are elevated, but we're not really at like a problem level. We're not at a support level either. We are sort of in the noisy territory. On the dailies here, you do see that a bit of a sell signal on the MACD. But this is a very erratic chart, as you can see here to the left. So there will be a lot of signals. So it's a bit noisy, but we do have the 200-day support. We have been below the 200-day moving average here ever since this fall back in 2022. So now we are sort of fighting finally and establishing ourselves above it. So I do think that this is a bit of a potential event for the bond market. So let me go into my notes. 200 DMA support. That's the key signal. I think I will give the bulls a 5 here. Well, no, not the 6, a 5. Because it is bullish, but it's a bit of a noisy chart. And next we look at the seasonality to the left here. We do have the seasonality forecast, the red the last 10 years, blue the last 7, green the last 5 years. Do have some bullish seasonality in front of us. April, very green month though, very bullish month. It is the #1 month for this ETF, going way back here to 2007. That makes me bullish, especially given that we so far have a bit of a loss. This is the second worst April so far. Contrarianly speaking, that's bullish. May is a go-away month, though. It's a very red month. June also not a good month, but there could be an opportunity here if you want to be a bit bullish. So I would give the seasonality here an 8. That's a very strong score, but it is, however, a very short-term bullish score, as we saw May, which isn't that far away. This is recorded on, let me just get the numbers here, on the 23rd of April. So we don't have like a big long-term trade, but it's bullish. Let's compare here the total bond market ETF, the BNDX, with the high yield ETF. Looking at performance year to date, 2.8% versus 3.11, so relatively close. Beta is much lower for BNDX, which is good for those who don't want that much volatility. Yield 1.6 versus 5.5%. So only the high yield ETF is really like a fixed income ETF. I mean, with 1.6% yield, yeah, it is not really a, well, there is a dividend, but like I don't really consider anything below like a 3% yield really a yield product at all. So it's sort of like, okay, quote unquote, BNDX is a fixed income / yield ETF. So yeah, you have to go out there on the risk curve, it seems, to get yield these days. Of course, there are people who do like these bond ETFs because of the reduced volatility. That's of course good, but if you don't get yield and you don't really get a return on the bond, that isn't really a great thing. That doesn't work out long term, at least. Okay, relative performance. Long term, 21% positive correlation with S&P 500, 92% with BNDX, pretty strong positive, but 94% with LQD, which is the investment grade for corporate bond ETF. Short-term correlations will be the arbiter. Then we have 81% with S&P 500, 66% with BNDX, and 84% with LQD. So definitively what happens with LQD is going to have the biggest effect on the high yield bond ETF. We see something a bit similar here. We are relatively far down here on the chart. Could be, though, a contraringly bullish. On the dailies, the blue 100-day moving average, in this case, has been sort of like the one that the bears use. Here, the bears confirm it, but you see that it's now pointing upwards, turning a bit into a support level. So that could be bullish. In the same case that we saw the 200 daily moving average on the high yield ETF. Seasonality, yeah, decent here into June. April, a very green month. May, recently it's been a green month, so that's also further bullish. Now let's compare them against each other, like that. And then we go like LQD. Okay. So a bit noisy here. We do sort of find ourselves in the middle here on RSI, on the dailies. Very much in the middle. Let's look a bit here at the seasonality. Noise, very like flattish and erratic. The table view. April usually is a month where, looking at the sum, high yield outperforms investment grade corporate bonds. May is not that good, nor June. So this corroborates the idea that we have. Okay. I think I will give the bulls. I'll give them a modest 2 here on relative performance. We end up with 5.3 in favor of the bulls. The key entry signal, stop loss, is 200 daily moving average support. The seasonality and the fundamentals corroborate it. And overall, I do think that this is pretty interesting. We also saw some interesting patterns in the investment grade corporate bond ETF, which is more like higher quality bonds in the corporate sector. High yield bonds are also called junk bonds. Okay, we do have time left. Let's look at some small caps, stocks. Let's look at Crocs. Crocs, like that. Nasdaq. So definitely being on a pretty strong rally. Let's have a bit of a look here at future price action. Okay, we're not extreme overbought yet on the weeklies, nor the dailies. Looking at some of the previous rallies, we went actually a bit higher. So it's not really shortable yet, and it's not really that interesting as a long candidate either. 16% so far for April. It is definitively on the higher end of the spectrum when it comes to April performance. So might not be that much left. Texas Roadhouse, a restaurant stock, breaking out. Dailies, So this is good if you have a position, but entering a bullish position here doesn't make a whole lot of sense. You at least want some kind of pullback, and it's not really. It's not. Not that shortable either. So let's continue down on the list. Stag Industrial. I've never traded Stag. peeking out here above some resistance levels. Looking at the dailies. Yeah, buying it at the 200 daily moving average would make sense, and then you would have about 6-ish% gain. But currently it's sort of, I don't like to buy after a move sort of it's begun, I don't want to like miss the part of the move right where you get that buffer. You always want to have some buffer. Wingstop was really big in the news during the C19 lockdown. Also, it's very high. That's the thing. It's sort of like it's a bit too high to buy now. You would rather want to wait for a pullback. Looking at weekly RSI, we are at resistance, so that's potentially bearish. Daily, we're not here at the resistance level. So it usually is a bit bullish into mid-June, but then the seasonality really deteriorates. Murphy USA. What is that? Oops, Murphy USA. Musa. Zoom in a bit. Yeah, potential breakout or resistance. Looking at dailies, 200-day moving average is right above us. So let's gauge whether we will have a resistance or not. Seasonality to the left suggests a breakout. To the right, the table view. April is not really that bullish of a month. We already have a decent gain. May is very erratic, either bullish or bearish. June has recently been bearish. July is really a bullish month, but that's way off there into the future. So yeah, let's look a bit at the fundamentals. Resistance on price book. Price to sales, we have a recent resistance level going back here to early 2023. Same thing with price earnings. So Musa is also a bit of a noisy chart. Rambus never traded Rambus. Weeklies. Yeah, it's pulled back a bit after a big rally. Support at the 20-day moving average. We see that the green 50-day has been more viable than the purple 20-day though. Okay, ATI. Let's have a bit of a look at ATI. Also, it's a bit high. Qualis. What about Qualis? If Qualis found support on the blue 100-week moving average, it would be a lot more interesting. That's been a very viable moving average. But so far this year, it's not been as reliable. So we looked at high yield, and we looked at a bunch of stocks in the small cap IWM ETF. We did see that there weren't that many opportunities in the small caps. There's a lot of moves in development. And whenever you put on a position, you ideally want to have some kind of alpha, some kind of odds in your favor, and definitively a bit of a clear signal that you are trading, because if you have like an obscure signal, then you don't know when to put on the stop level. So all in all, there's developments in the market now that are something to really keep our eye on heading into the summer months. To get more data, you go to diamondarm.com and have a great week ahead.